A special Minds and Money welcome to today's panel. My name is Richard Morrow, Chairman of the Melbourne Mining Club, and I'm hoping to be as unbiased as possible dealing with today's topic, which is kind of based around exploration in Eastern Australia. A quick health warning, the discussion today is not, I repeat, not financial advice. So please consult your financial advisor. If anything you hear today you feel like acting upon, please consult your financial advisor. We've assembled an all-star panel today to discuss this topic. My job is to stop this discussion degenerating into a battle between Victoria and New South Wales, or perhaps encouraging it. On today's panel, and wearing the big V, I have Hedley Widdup, Executive Director of Lion Selection Group, geologist and venture capitalist. Karina from Acorn Capital, a geologist and fund manager based in Melbourne. In the New South Wales corner, we have my colleague from Minnett, Dylan Kelly, resources analyst. These resource analysts are a bit of a dying breed these days, and so it's great to see new blood covering the sector. And completing the New South Wales team, we have Daniel Porter, Portfolio Manager for Resources at Pure Asset Management. Thank you for joining the show, guys. Just to set the scene, and let's kick off. Where else would we like to start but the latest exploration data from the Australian Bureau of Statistics. In the December quarter just gone, Australian exploration was little changed year on year, but if we drill a little deeper, we see that Victorian investment in exploration was up a useful 23% at 42 million. You annualise that out, it's just a bit above 150 mil, which is quite an impressive number, if I may say so myself. Look, Aussie exploration and also in Victoria is very gold centric. Gold accounted for $400 million of exploration spending across Australia in the quarter. That's more than double that spent looking for base metals, which was around about 150 mil. Victoria is having a gold boom. New South Wales, on the other hand, saw exploration slip 24%. We'll go to the panel on that one in a minute. Both eastern states, of course, pale against the exploration spend in Western Australia at 480 million in the quarter, which is just up fractionally on the previous year. Wow. So with Victoria, I think we've gone one up on that one on exploration. So let's go to our panel. And Karina Bader, you're a former geologist, but also a veteran of the mining investment markets. This leg of the cycle is very exciting. What does Acorn Capital team make of the current market conditions? And being Melbourne based, what has caught your eye about what I'll call the Victorian gold exploration boom?
Thanks, Richard. I think what we can see here is that there are a number of companies which have picked up ground over the last few years. And then in 2020, they were able to raise significant amounts of money, 5 million, 10 million plus, which, as we all know, in the exploration game, cash is king. And so we've seen that deployed in the figures you've just mentioned into the Victorian economy and the exploration opportunity in Victoria. So my view is that we're at a very great point in the cycle. The companies are funded, they've got cash, they're out there, they're drilling. Obviously, there was a little bit of a hiatus over Christmas at the fire season, making it a little bit trickier to actually get drill rigs on the ground. But they're out there now in April and May. So I'm hoping to see some really significant results. Recently, we saw some resources being published by Navarre. And I think what we'll see over the course of 2021 is that money raised in 2020 will actually result in resources discovery for Victoria.
Yeah, those results are a bit slow coming back from the assay labs at the moment, aren't they? Are you seeing sort of, a few ructions there and a few people grizzling and moaning? I certainly am.
Well, I really think there's clearly a business model for someone to set up a lab in Victoria, because most of them are sending their assays off to Western Australia for processing, which just seems ridiculous, doesn't it? Yeah, we're talking about a 6 to 8 up to 12-week turnaround in assay results, which is making it a little bit challenging for companies, because news flow is the sort of lifeblood of exploration companies. And if you're held up with your assays and if it comes in big lumps, then yeah, you can put one great news story out, but then you might have to wait another 6 weeks for more news. So that can be a challenge for the junior space.
particularly in some parts of Victoria, it's a very small window, really. You can't really explore all year round. So if you're sitting waiting 12 weeks for assays to come back on where to site your next hole, it can be a bit tricky, can't it?
Absolutely, and you and I know we've been in this game a long time. That news is extremely important to the ability for these junior companies to engage with their shareholders, engage with the community, and so assays are sort of a visual representation of the impact of the money they're spending in the ground. So I'm really positive. I think 2021 is when you're going to see some real excitement come out. We're already seeing a little bit of M&A activity. I don't know if you saw White Rock and Ostar, I think it's Ostar, talking about a merger, which is going to its shareholders in the next few weeks. So I think we might start to see more of that transpire over 2021. So I'm pretty excited.
Well, Victoria, I think will have a place in that in an M&A boom right across the sector. I think it's even just recently we had Roxgold take over in over there in West Africa. So it's a bit of that testosterone is pumping away there. So we'll see how that pans out. Well, thanks for that, Karina. Well, don't go away. We'll come back to you, but move on to Dylan. Talk about New South Wales there, where the weather's always perfect, I understand, mate. Dylan, you're a Sydney-based analyst with Minnett, and our man on the sell side on this panel today here. In the Melbourne office of Ords, I follow your work closely. What are you seeing across the sector generally, and in New South Wales in particular?
Thanks, Richard. Yeah, so over the last 18 months, as has changed for everybody, we've decidedly taken a local focus in what's in our backyard. If we're speaking specifically towards exploration, it's pretty much what we can drive to in a day, which covers pretty much anywhere from south of Canberra all the way up to Cobar. So places that perhaps that we materially overlooked in the past are now suddenly quite interesting, because that's the only thing that we can really kick the tires on. So my focus in terms of what's interesting there, we really like the look of, say, Alkane's new porphyry project, Boda. That's just east of Dubbo. And also looking at some of the old, or some of the brownfield developments that's coming up from Aurelia's projects just south of Cobar at Peak, and Hera and its Federation discovery has caught our attention. On the topic of exploration, I think it's also worthwhile touching on some of the material that we were exchanging a few weeks ago out of the New South Wales core farm. Now, a junior called Sky Metals took us out there the other day, and for reference, they carry about, 1.5 million meters of core from across the state, dating back to God knows when, and all the major deposits along the way. Now, what I found interesting about that trip was this notion of zero discovery cost. So on display, they had core from one particular deposit back from the 70s. The trays hadn't probably been opened since then as well. But what came out was something that I thought was rather intriguing, in that you could view the material for free. You didn't even have to peg it. You could send off the material, send off the core if it actually had been assayed, to get redone yourself, under the only proviso of providing the data and material back to the department to add to the library at a certain point down the track. So here we have, some of the greatest discoveries in the country, alongside a lot of unutilized core that doesn't require anyone to even hit the ground. Got me thinking a lot about where exploration ends up heading in the future, particularly if they start rattling the tin in front of us again. So I think my focus will now be asking the first question of, have you been to the core farm yet?
Yeah, I'll tell you what, and if anyone else listening here would like some more information on it, I'm sure they could approach Dylan or myself, and we can send that through to you. So, it's a valuable resource there. And look, New South Wales probably also has the prize at the moment for the newest gold mine. I'm thinking Dargues here. I'm thinking project started a long time ago, but finally first pour of gold, I think it was last year, wasn't it? And now safely inside Aurelia, which is making that quite a chunky little company now, and one you follow as well, I understand.
Exactly, yeah. So I've just had a first site visit. I think that's probably since investors had the chance to kick the tires in probably about the better part of a decade. Interesting site, just 65k south of Canberra. I think the reason why it's interesting from, I think, just a discussion point of view is this might be best practice in terms of how operations have to bend over backwards in order to accommodate the locals. So when you drive past the site from one side of the from Braidwood down to Majors Creek, you can't see the site from the road. Everything's hidden behind little visual buttresses. All the kit is effectively hidden away. The plant is hidden under giant sheds, and the crusher only runs during daylight, not during the night. All sorts of little things there that struck me as very unusual. But if you had a very tortured start to your existence with getting along with the locals, this may be how it should be done.
Yeah, that's look, I think it's something we, in the eastern states in particular, particularly New South Wales and Victoria, we've got to learn to get on with our neighbours, and I think we can. It's just a matter of showing a bit of courtesy to each other. Speaking of courtesy, I think I should be courteous now to Hedley Widdup. Hedley, thank you for joining us today, and from Victoria and at Line. You see a lot of ideas and a lot of projects coming across your desk for review. Someone for the second or third time, I imagine. But what's the biggest change you are seeing in the Aussie sector and in Victoria in particular?
Yeah, thanks, Rich. Thanks very much for having me on the Big V team. It's always a pleasure to go head to head with our northern neighbours. We know we have them on the personality stakes, and to be able to battle them on the exploration and geology front is just a privilege, because I think there's a lot that we can compare there. And I might just go into bat for myself and Karina, because you've introduced me in this way before, but just back up a bit on the former geologist and the veteran bits, because, I think we're both still in our prime, both in terms of age and geologists. So anyway, we'll make a start from there. One of the interesting things that strikes me, particularly about projects that come through that are in Victoria, but also New South Wales, because bear in mind, geologically, as much as the Murray River is a really effective moat, quite a few of the rocks go under, and there is, in fact, all of the rocks go under. There is somewhat there is somewhat continuity in terms of interesting packages, and some, in fact, extend right through from Tasmania. But let's keep it to the competitive relationship that we've got going here for now. Quite a few of these rocks, they're complex geological packages, and if you zoom back 20 years or even 10 or 15, there has been an enormous leap forward in terms of the understanding, or there's been enormous contribution to our understanding. It's not that we understand them now and didn't before, the understanding has just grown, and that in some way has contributed to the exploration effort, and I would say the success of some of that, which is, that adjusts investors' perceptions towards these projects as well. A great example, if you think of the investment catastrophes that were Ballarat and Bendigo gold mines I think they were the noughties. They spanned long periods of time, but neither of them were successful in terms of becoming super duper cash flow that was perceived from some of the early studies. I know Ballarat has produced cash along the way, not nearly as much as their original feasibility study envisaged, and Bendigo fell well short. It didn't even really get into production compared to the 500,000 ramping up to 700,000 ounces per annum that was envisaged. I had a look through what was evident of the study on the public domain the other day to refresh myself, and it's quite astounding. What those studies were doing was tinkering around the edges of known mineralization, looking for something that the old timers had missed, which is fraught with danger as an approach to a mining project, and then trying to squeeze the economics, which hadn't worked for nigh on 150 years since the old timers came to the end of their tunnels, and there was something about a modern approach that was going to change them, and it didn't. Fast forward to now, and we've seen a couple of wonderful discoveries. The example in Victoria, to contrast with those two, is of course Fosterville. You add some new gold to the mix and a genuine new discovery, and all of a sudden you're into something which can produce wonderful cash flow. And I think you could probably extend that analogy a bit, although it's different styles of geology, to things like the Alkane Boda discovery, which Dylan was referring to earlier. which has shone the light on the potential in New South Wales for new porphyry discoveries, which there hasn't been for quite some time. So I would say the biggest difference that I've seen in that decade is a change in understanding of geology. It has shown there is immense prospectivity still in some of these old fields which had appeared mature, or where the science had drawn up a blank before. And here we are finding a new frontier, perhaps through a combination or through just the application of a new technique. So like Karina said before, you know, the industry is funded and exploring, and all of a sudden we've got all these new rabbit burrows to dive down as well. And I think that's going to hit runs for both states, but probably far more for Victoria. That's the emotional part of the answer.
Also, a bit more imagination has gone into the exploration in Victoria, haven't we? I mean, yeah, pretty easy to go, dig, or explore, drill underneath Ballarat and Bendigo, and why not? You might hit a few little ore bodies of the old timers missed along the way, but it certainly, ran out of a bit of puff after that. But these new guys on the block, things a little bit further north from Bendigo, like Catalyst and Navarre, and then you go over to Stawell, and then you even come over to the north a bit, and then over to the east, and suddenly there's some things happening there where that people show a bit more imagination, and they use some of the work that the GSV's done to really kick it along.
And sometimes I would add to that, it might be that the sources of money that come sneaking in and promote these things and push them forwards might be a different source to what it was before. Fosterville, of course, was discovered by a Canadian company. Shame on us for it being under our noses for so long. But then, there is a number of Canadian companies which have listed on their Toronto Stock Exchange or the Venture Exchange, which are now exploring Victoria. And you can't see the results nearly as easily as you do for ASX listed companies here, but that money is flooding in. That will make big differences, because there's many models and things you can come up with from inversions of geophysical information and big seismic studies and things like that. You need to test them with the drill bit to determine what economics look like. And that's what's now happening.
Mate, I might come back to you on that point again, but I'll move on to Daniel Porter if I can. Thank you very much for joining us today, Daniel. The Pure Resources Fund. Here's a little, can you we'll go over to the other side now, we'll have a look at the finance. Can you tell us a little bit about the fund and what you do and what you're seeing in there?
Yeah, absolutely. So look, from a Pure perspective, we're a new fund. So we launched officially about 3 months ago. But we've had a really good capital raise process recently and now in the process of deploying that cash. We look at things a little bit differently. So we are a hybrid debt fund. So not your traditional equity only or even a project finance type of fund. We look at hybrid debt solutions for companies. Now, in the resources space, we've seen a few of these products in the past, and a lot of those products have been, had some, big hooks and things in place. The team at Pure, we're all equity analysts by background, sell side and buy side, and so we're very much focused on the equity piece of that hybrid offering. So we look for companies in that small cap range, that sort of 30 to 20 to 200 mil sort of cap range, that are looking to get into production or already in production and looking to expand. So we found, in the last few months, we thought our approach was fairly unique from an Australian perspective. There's definitely products like this from offshore, particularly in North America, but we didn't realise how quickly and well that would resonate. So to be fair, we've been pretty busy in the last few months, which has been really good and really pleasing to see. So and just turning towards New South Wales, we've seen, I think, thematically in the last 12 months or 2 years, I should say, and you touched on it a little bit earlier, Richard, where we've seen a decline in exploration versus the boom that we've seen in Victoria. I think it comes back to a little bit of the permitting and approvals process that we have in New South Wales. We've 10 or so years ago, the process did change quite dramatically, and it's quite difficult for companies these days to go through that, particularly at the smaller cap end. And I think it discourages a lot of those companies from attempting to sort of expand and drill out new resources in that case. So, I'm not surprised that we've seen a decline in that spend. I think that's coming through from that top level approach. What it is fostering, though, is a lot of consolidation in the sector. And I think that's a theme that's going to continue over the next few years as well. So really a few smaller companies trying to push big hub and spoke production models, which I think is the right way to go. But it's ostensibly because it's so hard to get approvals through. Once you've got one and you've got your mill up and running or your production facilities up and running, then happy days. It's just about feeding it, and that's where I think that theme will continue in the next few years. So, you know, to Karina's earlier point with White Rock, you know, they signed up a JV agreement with Thompson Resources a few months ago. You know, we've seen a lot of development, interestingly, in that Thompson, Oregon, and through the New England belt as well, which we haven't seen for a long time. You know, a lot of focus has been on that Lachlan Fold, and we're certainly seeing a lot of companies move through from that exploration phase and into the next phase of attempting to get into that project finance type level and building out production capacity. But what we're seeing in more cases is an inability to get there and then having to sell up assets. Now, there'll be some savvy companies out there, and we're certainly looking at a few of them. You know, Thompson Resources being one of them, and Red River as well with the Hillgrove asset just outside of Armidale. We see some really good potential for expansion for that one as well. But you know, from our perspective, we're looking at sort of the next phase, the pre-project financing phase, but what comes after exploration. But certainly what happens 12 months ago is really going to be an important guiding factor for our fund over the next 2 years.
What sort of products are you talking about, Daniel? Is it sort of things like streaming or hybrid or con notes, that sort of thing?
Yeah, so look, I guess the simplest way of talking about it is convertible notes, but although we can issue that, we've never actually issued one of those in our fund, and we don't think we will. We break those two components of a convertible note down into its base forms. So we offer a straight debt piece on one side, and then we look for warrant or option coverage on the other side. Because we're a debt fund, we can sort of go behind the wall and do some proper DD, and that's what differentiates, I think, from a lot of other funds in that space. And then we price those that equity piece on the basis of the project that's coming ahead. So generally, we look for those warrants to be at least 100% above your current share price and out of the money from that perspective. But the hope is that our debt piece will generate or give the company an ability to generate some cash flows, trigger an equity re-rating, and that's where we make our upside.
No, that's
so good success so far. So it's resonating well. Yeah,
that sounds quite good. Anyone to talking to Daniel, we know where to find him, and please just form an orderly queue if you want some of his money.
Absolutely. No, happy to have all those conversations. Thank you, Richard, for that. It was a great plug. Thanks.
Mate, good on you. Karina, can I come back to you just on this Canadian money coming into Victoria in particular, and what you think it's doing? Is it distorting things, or is it enhancing things? Is it making it harder for locals to get land or things like that? Can I run that past you?
Yeah, I think you're right. It certainly brings a more competitive landscape to the permitting or the application of permits and the tenement application. I'm sure the government itself is quite happy with that. But yes, if you're a poor suffering 10-year Victorian explorer and you can't get your hands on a tenement because the Canadians have turned up and decided to pay twice as much as you think it's worth, then I guess that would make it a bit frustrating. And I guess when it comes to exploration success, what generally aggregately, on an aggregate basis, when you apply all of that money that's being put into the ground now, whether it's Canadian money or Australian money or any other money, the success will come, but it's not necessarily going to be shared equally in terms of where the discoveries are made. In terms of the Australian companies that are in the space, obviously you've got some majors out there who have been around for a long time and have very high balance sheets and have the capacity to decide very easily how much to spend. The junior companies that have been exploring in Victoria for 5 to 10 years, the Navars, the Staveleys, the Catalysts, you know, they've been around a very long time, and they've really struggled to raise money for a long, long time. You know, it was 2 million or it was 5 million, but have now been able to go to that next level. So I think, yes, it's made it more competitive in one way, but it has also shone a light, as Hedley mentioned, on the discovery potential, and Kirkland Lake being sort of the poster child of how that has worked for Victoria. It has then brought the investor's eye to those Australian companies who've been here a long time, and they've picked up their ground. They know where they want to be, and they've been looking at for a long time. And that's where I think what you're going to see now is the culmination of years and layers of exploration on top of each other, resulting in real discoveries being made for Victoria.
That's a very good point. Yeah, definitely. Dylan, you were mentioning Voda just a minute ago. I mean, how important do you think that is in terms of really, focusing the attention of investors on New South Wales and on that sort of Lachlan Fold Belt in particular? And give us a bit of colour around that one.
Thanks, Richard. Yeah, so I think Hedley mentioned that the point before about how rare or how infrequent when the last porphyry discovery was in this part of the world. I think it was probably going to be Cadia back in the early 90s, since we saw a relatively large low-grade system being identified and ultimately drilled out. I think it is exciting, but as we all know, we're all trying to figure out exactly when is the time to own these things. We can have examples of, say, Sol Gold, only after 6 or 7 holes, suddenly gets snapped up very quickly by the international majors. Whereas we can have the likes of, say, a North Parks, which took the better part of 12 years to wrap their head around exactly where the high grade was, and identifying exactly what they could develop. And to a certain extent, that was true with Cadia Valley in its early days, or moving on from the quarry. Initial discovery and the excitement that comes with that does not necessarily lend itself to immediately sort of turning the rigs around and looking along strike and finding more. So I think we're only, 19 months since discovery. It is very early days, but I kind of feel that looking at the historical sort of precedent with whether it be OT, Cadia, and otherwise, 2 years in seems to be when the map starts taking a very closer look, and more rigs and more resources start being thrown at it. So I think, yes, it is very interesting. Who knows exactly what it could be? It's far too early to tell, but as we know with porphyries, the bigger the footprint, the bigger the endowment. So identifying exactly how long the strike is and testing in between there and seeing if it all connects is all part of the equation.
Can I ask you a little bit about permitting situation in there? I think we've all got our stories we could tell about the permitting process in both our states. But how's it? Can you make some comments about that, especially for, say, international listeners? Having a look at the Lachlan Fold.
Well, I think we only have to look at the likes of, say, Regis and the McPhillamys project to see just how much of a disaster it is trying to get anything up and running in New South Wales. I think the only other gold,
isn't it? We've got dogs we can sort of wave our hands about. But sorry, go on. Yeah, sorry.
No. You make a very good point. And if we look at Doug's, that was the first gold mine permitted in New South Wales in the better part of a decade, and that was in 2013. So there's a long time between drinks here in terms of any type of repeatable success. So I think the overwhelming frustration with a lot of people here is that whatever timeline that you do have, if it's a new lease, you've got to add at least 5 to 10 years in terms of question mark over it being developed. If it is in production and you do already have an existing license or a halo to grandfather you in, that seems to be the only real way forward. Or at least some type of shortcut to getting up and running, because as we know, timelines and patience are not necessarily things that the government will grant you in this part of the world.
Well, we're certainly seeing down in Victoria, and I think one of the things that resonates is that, let's face it, these mines are in regional and rural areas, and that's where jobs need to be created. So I think that seems a bit of a motivating force behind you know, a lot of the new way we're looking at things down here in Victoria. Is there something similar up there in New South Wales?
Oh, with an election coming off, of course. Let's just face it. We've got, I think, what is it? Glencore's Ulan project just got a nice, good kicker of a mine life for a couple of decades there. Geez, that wouldn't happen to be a local by-election coming up by any chance. Let's face it. Depending upon the cycle and where the emotions lay, even coal projects may actually be finding favour with politicians for a change, and somehow the Land Environment Court of Appeal might just get turned over just in this one instance.
Yeah, that's that one. That's a real muddle, isn't it? Anyway, thanks. Thanks on that. We won't tread too much in that. We won't step in something, you know. If I could move on to Hedley, Hedley, you're in touch with a lot of sources of capital, particularly outside Australia. I mean, how is your feeling? Are people, is that capital wanting to look here, or are our projects not big enough, or especially in Victoria and New South Wales? I know it's not specifically your area, but are you having those sort of conversations?
I think, well, the question around does it want to look here and are the projects big enough is, you know, there's a sliding scale of responses that apply to both of those over time. And, you know, if we asked that question in 2015, I think the answer would have been no to whatever the question was, if it involved money being used for exploration. 2017-18 starting to loosen, but, you know, Victoria was kind of in the midst of Fosterville revealing its spots and everything else, and that was causing a lot of excitement. But then there's always exploration hotspots as well, which can just drag money. It's like I used to work at St. Ives Gold Mine in Western Australia, which is on a salt lake, and on a windy day, the water just gets blown around the surface of the lake. You know, it's not tidal; it ponds on one side and then it ponds on the other, and that's exactly what happens in exploration sometimes as well. Prior to Fosterville being, you know, this wonderful high-grade discovery beneath it, and I can't remember what the discovery intercept was, but, you know, we've seen the likes of tens of meters and grades, you know, in the hundreds of grams, but tens of grams per tonne is not unusual over broad widths in this lode that's been discovered at depth underneath quite an old gold mine. Has put Victoria on the map, because something which is as rich as that, all of a sudden people from around the world want to go and look for more of it. And I'd say something as glib as, you know, it'd be easy to raise the money to go and look for that in Western Australia at most times. It's comparatively more difficult to go and look for things in other places. Victoria is, you know, down the easy scale a bit. It's starting to get a bit harder because of, and for similar reasons as Dylan was talking about, permitting and not in my backyard type stuff. I suspect that's the big issue in New South Wales or Victoria, is you're not surrounded by a station owner who has, you know, tens of thousands of hectares. You're surrounded by 25 different neighbours, all who live on 20 acres. They have a shotgun and some shirts that they ordered out of a catalogue. But other than that, they just want peace and quiet, and they don't actually farm too much. So this discovery put Victoria on the map, and I think that resulted in a real focus of money flooding in. It's probably also possible to say that Australian geologists, to some extent, were a little bit sanguine about, well, you know, how many more of these might there be? I remember at the time having a discussion with someone who was fairly close to that discovery and saying, this volume that you've discovered, is that the most valuable volume of quartz mineralized with gold ever found in Victoria? I mean, compare that to some of the jewelry boxes which have been described in history, but, you know, the actual size and shape and richness of them is not quite understood. And I think, you know, in terms of statistical probabilities, this one is way off the chart. But nevertheless, people want to come and find another one, even if there might not be another one. You might find all sorts of other things which are almost as nice. And it's easier for someone who doesn't have that historical you know, perspective to really make them a bit cynical about it, to raise the money and come and do it. And you know, it's an interesting comparison to make, to say the watermelon-shaped gold nuggets which were being found in the Pilbara in, I think, 2017. There was a company exploring for those and said they had a project. In fact, they're going into production now to try and dig these up, which took itself to a capitalization of over $1 billion Canadian. And I mean, Canadian dollars are almost the same as Australian dollars sometimes. It was a very valuable company. It was more valuable than Silver Lake at the time. In fact, you could have had, I think, Silver Lake, Dacian, Ramelius, and one other for the same capitalization. And that was driven by explorers going, wow, you know, this is awesome. It could be really huge. So that's the phenomenon which is, you know, blowing the water across the Salt Lake to Victoria for a time. And there's been, you know, measures of success along the way as well. There will come a time where, you know, if nothing as wonderful as Fosterville is found again, then those dollars might dry up or blow elsewhere. And they might blow up to New South Wales and find another porphyry. You never know.
And do you think maybe some of the gloss is coming off Fosterville, you know, with the production, say, forecast to fall about 30% last year versus this year? Is that, that's the way mining is, isn't it? I mean,
yeah.
You know,
all gold lodes come to an end, and that one will. And they've mined it, you know, aggressively. They put a lot of tons each year through their mill for something which is so high grade, which has taken them to be one of the biggest and most profitable gold producers in the world. But it will come to an end. And I think the tapering of production that we're seeing there and the dropping of their reserve grade is instructive of what's going on there. And look, I mean, I don't think we should be cynical or begrudge them or any of that, because they've had this wonderful success, and it will create new mines elsewhere with all of that money being invested. And it might even find something new in Victoria. I think they probably spent in excess of $150 million looking in Victoria. So their understanding will have improved that scientific piece dramatically as well.
Thanks. Yeah, Daniel. The this timeline we're talking about with from discovery to production, I mean, that must make for quite a few challenges for you. You got to sit around a long time waiting to. At what stage do you come into the picture? Is it would you get there at the end of the exploration phase, or halfway through it, or would you wait for, say, getting to pre-feasibility type stage?
Yeah, that's a good question, Richard. And I think from a hybrid debt perspective, and well, I should say any sort of debt perspective, we're looking for assets that can generate a cash flow within the next sort of 12 to 24 months. So from a pure exploration perspective, our product doesn't really suit that level of investment. We're looking for assets that probably have a pre-feasibility study on hand, or you know, certainly an outline reserve. But if an asset looks pretty interesting and it looks like they're onto something pretty good, then we'll have a look at that as well. So you know, definitely, you know, there is a gap. I think, you know, we sort of think of our product as a little bit of an alternative to raising equity. But there's definitely a gap in the market for that pre-project financing level of capital. You know, what we've found has been, you know, the two biggest driving forces for us and the intention of starting the fund was the banks have walked away from the sector in droves. Now it's not really about just coal or gas. It is about the mining sector in general. They have walked away, and where they are still investing, you know, some of those debt terms are particularly onerous. Yeah, you know, we're a hybrid debt fund. We're not saying that our debt is cheap by any measure, but we've been pretty shocked about some of the interest rates we've seen from the big four banks in Australia lending to the resources space, and it's just called, you know, just a signal that they just don't want to lend the cash. You know, they're happy to sit on mortgages and keep lending to the housing market, and they've really turned their backs on the entire resources space, whether it's, you know, gold developments or silver or you know, other polymetallics. It doesn't really matter. They've really you know, left the division or left their space in droves. So it's very, very challenging for smaller producers, and that in itself has extended the time frame for development. You know, you may have your permits and you may have your approvals, but getting that financing piece together, particularly at the small cap end, is exceptionally challenging these days. And you know, to your initial comment about seeing sell side analysts almost a dying breed, you know, that's certainly what we found as well. There's, you know, investment banks aren't making the same money that they used to. There's definitely less sell side resources analysts out there. There's less coverage of the smaller cap end, and therefore your cost of capital is by default much higher. So the decision to raise equity to fund that pre-project financing stage 10 years ago may have been a very simple one. Today, it's exceptionally challenging. So, you know, in a nutshell, you know, it's a gap in the market that has been created, you know, by forces much at a much higher level than what we sort of operate in. But there's certainly a gap there that's you know, needing to be filled if the sector is going to, you know, continue to produce and deliver jobs and, you know, the export benefits that we've all come to rely on and in our everyday lives.
Thank you for that, Daniel. And yeah, I guess we're going to bring it to a close. We're only banging on about gold here. I haven't even started on copper just yet, which, oh, well, there's more notes gone out the window. But look, at this stage, I really want to thank my panel today for coming in and making such, you know, very, I thought, well-structured comments on this wonderful industry of ours. Thank you very much, Karina Bader from Acorn Capital. Thank you very much there, Hedley Widdup from Lion Selection Group in Melbourne. Thank you very much, Dylan Kelly from Minnett, my colleague up there in Sydney. And of course, Daniel Porter, thank you coming along and representing the lending side and a vital side for the industry going forward. Thank you very much, and have a great evening. Thank you.
Couldn't have done it without you, Rich. Go Victoria.